The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. Once more, we go into the breach, dear friends. As always, we like to come to you at this time, which that time is...
The following takes place between 2 p.m. and 3 p.m.
So what do we have? We're up 20 points on the S&P cash, 2386. I thought we'd probably be down 20 points and then have an opportunity to come back up to the top maybe next week on light volume into a three-day weekend. Doesn't look like it, but I did want to go through some facts out here. They are sticky things. If you add up the New York Stock Exchange, the American Stock Exchange, and the NASDAQ, all the shares traded, we were going along somewhere between 6.8 billion shares a day for everything. And the last 2 days, we've had about 8.4 billion shares on those volatile days. We're coming back up, and my guess is that we probably, by the end of the day, will not have 6 billion shares on this push up. A warning to all, and it's been around for as long as the stock market. There's an old saying, and the old sayings probably continue because there's always a ring of truth in it. Bulls make money, bears make money, pigs get slaughtered. My thought, there's some people out here that there's literally no height that this market could go to where it would be overpriced. And I kind of like that because I'm always very fearful when everybody is giddy, and I'm incredibly giddy when everybody is fearful. To really do well over time and not give all your cash back in 2 weeks, which I've seen repeatedly. About 4 times in my trading career, I've seen people that were brilliant on the way up. They did everything perfectly. They didn't sell. They went to the top. You know what the problem was? They never sold. Never, ever. There's never a market when you've made that much money that you can sell. And, of course, I'm going to say 1, 2, 3, 4 times I've seen markets that were ludicrously priced. And again, as we said earlier in the week, don't be surprised to see 50-point and more S&P moves down. I thought it would be a gap. Just a 20-point gap down wasn't anywhere close to where I thought we could go. I'm still looking for a 40, 50, 60-point gap straight down in one morning, and mostly because everybody just knows it can't happen. We'll talk about some figures on why people are literally discounting the chance of anything bad happening in the stock market to zero. And that happened. If you thought that people were giddy on Tuesday, you ought to look and see what they did in the last 2 days, even the bears. So we'll talk about that. But we're up, 19 points now on the S&P cash volume. Just turned 2 billion shares on expiration day. We had a lot of people pushing one stock that pretty much dragged the rest of them up with it, which is Apple. Without that, we think we have probably some serious ability to pull back in the markets. But we shall see. I think what we're going to probably see is a little bit of chop next week and a serious downturn after the 3-day weekend. But we'll see. And that could happen at any time. It's like a bridge that could break at any time. You just don't know. You and your buddy are walking by and a butterfly lands on it and the whole bridge comes down. You just don't know what that last piece of straw is going to be. We saw them throw it on. Everybody got out and got to work on that camel and propped him up one more time. But I don't think the camel's any stronger than he was on Tuesday. Just one man's opinion. Just remember, bulls and bears make money. Pigs get slaughtered. What else do you have? And options are still incredibly cheap if you want to be long. Insurance is not a bad thing when every house in the neighborhood could catch fire. What else is going on out here? And we're just looking at a few things. But what did gold do? I didn't have a chance. And we'll get on to the rest of it out here. So it's up $2, $12.50, $4.60. Yeah, can't say much. We've got a few things to talk about here, but we'll get to it. We talked about the volume, which is what I wanted to open with. A warning to those people that think that markets never go down. And you know what we need to do? We need to start this show off, kick it off with a little bit of history.
And it's all just a little bit of history repeating.
It is history, and on this day in 1965, Pete Townsend writes My Generation on his 20th birthday. Why don't you all fade away? My generation. And don't try to dig what we all say. Talking about my generation. Anyway, kind of a very interesting backstory on this. He probably wouldn't have written this song, but he had to take the train on a long trip to go play a gig. He had to actually take the train because his car that he bought for 30 pounds had been hauled away by the Queen of England. He lived just about a block away from Buckingham Palace. And the Queen disliked his car because it was a hearse. He bought it for 30 pounds and had it hauled off because she didn't like it. They wanted 250 pounds to get it out of hock. So needless to say that that little hearse never came out. And he ended up walking around or taking the train for many times. But he had time on that trip to write this song. It changed his life. The rest of the band, it was ready to disintegrate. The song came out, was a wild success. And then they all looked at each other and go, well, we could throw this all away with our petty squabbling, or we can decide that we can make a ton of cash and have a lot of fun as major acts. And I think they still are. But very interesting thing out there. You never know what is going to put you into the right alley and in a position to take advantage of something. But on this day in 1965, I'd say the real first good rock song, probably written of the 60s era, My Generation. You can always give me a call at 877-927-6648. You can email me at path@tfnn.com, as some people have. And gonna play it. About my generation.
Just because we get around.
About my generation. Okay, enough of that.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And we go to the volume report for today. Yes, it continues to be wimpy. Today, of course, at 1 o'clock, the Baker Hughes drill count comes out. We see that the total count is now 720. That's the most since April 2015. And, of course, what do we have? Is it the 25th? I think it's the 25th, which is next Thursday. We've got an OPEC meeting. And that meeting will be about how to cut production so that the Americans can pile more on. Isn't it perfect? They may be able to cut production, but guess what? Everybody and their dogs out there in the West ready to get some oil out of that shale. So I don't know if it makes any sense for them to continue cutting, because that all it means is we're going to make more. It's good for us. I just don't understand the wisdom of them thinking that they can drive prices up by pumping less. All it does is the prices go up, but they don't sell any more, really. Just higher prices for fewer barrels for them. But on this day, anyway, 720, the most since April 2015. And, you know, we've been going up, 5, 10, 15. It's nice to be an oil-producing country now, isn't it? Just imagine what we'd be like if some had their way and we were producing none. We'd all be in the bread line. Anyway, what else is going on out here? Let's start looking at some charts. Of course, the one stock that everybody must own, and if it dips more than a couple of bucks, you must buy it, because that's what they tell you on TV, is Apple. You must own it. If you don't own it, there's something severely wrong with you. Very wrong with you. I do have to tell you that we have some patterns developing, and I wanted to go through this today because there's so many of these stocks doing it. They haven't had the last little confirmation, but I think we get the confirmation next week. Many stocks have already started down. I think that some of the bigger movers out here are ready to roll over. For Apple, I think we're talking about this going to 144 in June. And we'll talk about how this works out. We got plenty of time. There's a pattern. I brought it up several times. It's called the double repo. And you want to wait for the confirmation most times. Sometimes you don't get it, but when you do, it's fairly sweet. He came up with this thing when people had compact CPM machines in 1980. I've talked to him a couple of times about his early computers day. If you remember, if you're old enough to remember, the thing kind of looked like a small, what would you call it? Like a small cooler. It had like a cooler hand on it that you could handle on it that you could pick it up on. It was big and square and deep, and it had, if you were lucky, you had 2 drives, but most of them just had 1 drive and a small CRT that was about 10 inches, and the front of it came off, and it was a keyboard. Well, he was big into computers. That was his business before he got into trading, and he did some very interesting stuff with very low-powered machines at the time. But that CPM machine was fairly interesting. He did a lot of work. He kind of tried to come up with some ways to actually project moving averages into the future, so they were interesting. One of the patterns he came up with is if you take the 3-day moving average and you just put that 3 days in the future and keep drawing a line out past, you'll get what I kind of look at, if you're familiar with your high school calculus, a derivative of the move. So you want to just kind of extend that line for a couple of days and see whether or not stocks closed above or below it. He came out with a pattern, or saw a lot of patterns, especially in commodities, where if you get something like 10 to 15 days straight up without dipping below that 3x3 displaced moving average, that's the first part of that signal. The second part is you close below it, and you do so like Apple did. You do so with volume. Something, what did you have? The day before you had 20 million shares. The day of this going below the line, you had almost 51 million shares. So significant volume off the top, as Tom likes to say. But I like to say it just broke on volume. Then you have a couple of days where you kind of come back up over it. You even spend a couple of days, maybe you spend a couple of days over that. And then the next close underneath it is when the trap door opens. That takes you right back down to where this all started, in which case you're looking at about 142. And can't say that we've got confirmation in this pattern, but whether you're using a 3x3 displaced moving average, or you're doing something like, we can just go to the traditional 9-day moving average, you get something that's fairly the same. The 9 days a little bit less bumpy than the 3x3. But we're almost closing, only getting close to being above that 9-day moving average. And so if you kind of just go over that a little bit and then you come back underneath it, that's it. You push back higher. There wasn't any juice. In fact, what it was, 17.5 million shares today compared to 33.5 million shares yesterday. So we're back up to the gap. We've done so with no volume. This is whatever, what is it, 16% of the NASDAQ 100 now? Something like that, 15%. And the top 5 companies in the NASDAQ, or top 6, are 57 or 58% of the entire NASDAQ. So pretty heavily weighted. It's going to be very tough if Apple sees any weakness at all to continue to see anything from the stocks and the semiconductors to the rest of the tech sector out here that is problematic. And a lot of these tech ETFs have the same kind of similar pattern that I showed in the newsletter this morning. So you had your warning. They told you. You woke up Wednesday, you saw it, a little bit of warning. You got a pass. And it's amazing how many times people will get an opportunity to sell a stock, and they won't. They know that, well, yeah, I made a lot of money on this thing. I can just let it ride. And that's the kind of thinking that eventually saw. I was in a trading room long before the Den was around. And I remember being there right there when the .com thing blew up. And I wasn't smart enough to be as bold as everyone else. So I lost out on some of the money up. What I didn't lose at was giving it all back in some cases 2 or 3 or 4 weeks in the .com bust. And the more you go at these markets at highs and at lows without thoughtful speculation, the more the gambler in you comes out and the intelligent and thoughtful speculator goes away. So just a word of warning. I showed him, as somebody asked for other double repo patterns in my newsletter today. Thank you, John. Check out my newsletter. What else do you have? Amazon stock from here. We'll take a look at that. And other AMC. I'll see if we can't find some more. I mean, there are.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And looking for some other patterns out here. I don't see anything I didn't have in the news that I wasn't looking at this morning. But just wanted to do that mostly for my newsletter subscribers because I had one in there this morning, and I wanted to just add a little color, as they like to say on TV. Again, you can give me a call at 877-927-6648. you can post a message in the den. And, of course, we will look at it. And someone actually did do that. My outlook on Amazon, AMZN. Absolutely no signals out here. Again, when a stock gets to 90, most likely it hits 100. And that pattern kind of holds up. If you hit 900, it's 1,000. So, what else can you say about that? My guess is that, this thing could pop one day to 1,000. And, at this point, it just doesn't matter. People are just buying. They're going to buy it. Buy. I don't understand it, but it's there. Okay, so probably 1,000 on that one before anything happens. There's absolutely no signals that says that this one changed, other than a fact that we had 3.1 million shares on the 16th. Today, we have 2.5 million shares. So, is it that bad? There are a ton worse. My guess is that this will have as much volume today. So, again, no real signals, no blowout to the upside today. But you had more volume down. But this thing could still hit $1,000. I don't see anything that changes in that. Request a look at MSFT, Mr. Softy. Microsoft today, not really getting the love that some of the other stocks have. Yesterday it was down with 25.2 million shares, 15.8 million shares so far, and a little higher, but nothing to really write home about. This thing is run very hard for a while. It's been probably the best run company of the last 3 years for technology. I think that maybe, and I wrote about it in the Tech Insider either last Friday or the Friday before, I'm starting to see a couple of mistakes that these guys are making. And maybe those mistakes are enough to get this thing to pull back a while. You did have a kind of a gap up with about 30 million shares, but it got into it with 30 million shares on the 17th. So there's nothing out here in this one that really says a lot. Let's take a look at Facebook also. Facebook. Now, this is another good one. Let's see if we got it on that one. Okay. This is kind of the same pattern that I'm talking about out here. You almost have one more move above in Facebook. Okay, so this thing went above the 3x3 on the 17th of April. So you had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 days. And in the olden days, DiNapoli's thing was that you have a big thrust somewhere between 10 and 15 days, although I've seen that is much longer in this era of trading. You closed below it for a few days like you did this. Now, this one kind of pounced down to 144.42. Now we're coming back up. Nice day today, but just 12 million shares compared to the 23 million shares that we had yesterday. So not a lot of juice on the upside. What you would say is if this thing closes back above the 3x3 or 9-day moving average and then closes back below it, the next close below it is the get out of the way, because then it normally is going to come back to where the first day that it closed back above the 3x3. In this case, that would be the candle of the 17th on Facebook, and the high of the day on that day was 141.55. It's not the end of the world on Facebook, but this pattern is fairly quick when it does happen. You've had your sign of weakness. You're coming up, and you're having a sign of weakness going back up into this gap. But a lot of times, weekends, 3-day weekends or not, you get the next pull on this. You just pull the trigger and close your eyes and set your stop, because when these things work, they absolutely just rip and rip quickly. I have some put options on Seagate expiring at June 2nd, 43s. What do you think? Let's take a quick look at it. This one bombed on earnings, and now I know why, because I've been trying to buy a bunch of hard drives to build up another system. They have a problem with their drives from the reviews that I've read, and they may have as much as 50% of their Barracuda drives failing in the field. They are trying to kick them out at a very low price today. Maybe I can find the ad during the break. But I think I could buy a 2 terabyte, excuse me, showing my age, aren't I? 2 terabyte Barracuda drive for $59. I think that's what it was. And all the comments below go, I wish this was a Western Digital drive. Apparently, everybody's been getting about 50% failures on it. That is one of the biggest drives they make. And most of these things are 6, 8%, maybe 10% margins on them. You get one return, and you're gonna have to sell 15, 20 drives just to break even on that one return. So if those guys are doing 50% failure rate over the first month of operation on them, these guys could have a huge downside risk. You're back to your gap. It's kind of gone sideways out here. June 2nd, I would hold. I don't think that there's anything on this that really gets any better between now and expiration for you. So that would be my opinion. I don't see anything in the chart that suggests that this thing's going to bounce. You got a low volume day today. But I think you got at 41. You had your first test at 41, but you had lots of volume. You're going to go back and retest that. Now, volume goes to nothing like Wednesday of next week in Seagate. Then I could say maybe it was time to take it. My guess is this thing fills the gap down to 38. If any of this stuff is right. We've got about 1 minute to go. Let's take a look at some other ones out here. What else did we look at? Somebody asked earlier in the day what I thought of Autodesk, and it kind of reminded me of the kind of patterns that and movement we saw in NVIDIA, where you had the huge spike, earnings were great, everybody loved it, came back down, and then ran right back up to the highs, and then fell apart. Certainly wouldn't be shorted. Nobody else is. There was only one day of shorting in the last like 30 days that amounted to anything on Autodesk. Of course, first day out here, so normally you don't get an instant sell-off. But that's what I was going to say. You watch this like Monday, but if you go back and look at the NVIDIA chart, when it popped to 120 the first time, it sold off, went back up to the went up back to the highs, and then fell apart, and then went right back up to 136. So I think you got kind of a pattern.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And we'll get back to this. Anyway, I've looked, there's a great website called slickdeals.net. And if you check it out, they've got a lot of ads on stuff when people are dumping stuff. And not only can you pick some stuff up, but I've seen various products being dumped there. And literally you find the company tanks on the next earnings when they're trying to get rid of a lot of stuff like this. But anyway, if you went down and looked at the notes and everything out here for this, it's kind of interesting. Amazon reviews indicate that the failure rate is relatively high. And then you get down there and people are all talking about how they had to return several of them and 4 of them until they got one that worked. Anyway, that deal's over, but it ran for a couple of days this week. But $60 for a 2 terabyte hard drive, not making a lot of cash out there. Other questions in the den out here, which is CRM getting a hopping pattern? And, well, you've got your first close yesterday, secondary close out here today. I don't know what happened to this after earnings last night. You pinned $90.95 and closed back below it. Again, how many days did you have out here above the 3x3? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 11, 12, 13, 14, 15, 16, 17, 18, 19, 20. So you had 20 days above it. You closed back below it before earnings. Earnings after the bell last night or Wednesday? I thought it was after. It had to be last night, right? This has been a long week. In case you haven't met, I've been burning the candles at 3 ends. Didn't know there was a candle with 3 ends, did you? Anyway, if this thing, what you're looking for is a close back above it and a close back below it, and then watch out, it comes back to about $84. So yeah, is there a pattern out here? Yeah, and this thing could quickly come back down to the $84. It's not the end of the world, but again, a lot of these stocks just very toppy. And one of the other questions in the den was whether or not Autodesk is now 10 times sales. Is it going to go? Are sales going to go higher? Just everything is extremely highly priced. I see a market that scares the bejesus out of me to be long, and also tells me one other thing. And we've talked about this before, and I've done it many times. And that is go into options expiration, find stocks that are hugely short, and by Friday, they've popped fairly well. And a lot of times, if they haven't popped by Thursday, you can buy calls on them in the morning and make out like a bandit in the afternoon. This one, again, every option market maker ran for the hills on Wednesday, and I had no real clue on which way. I actually thought the market was going to head down and maybe with lighter volume into next week's 3-day weekend. Well, not so much. We could make a case that we go with lighter volume into the 3-day weekend and set up yet a huge brown storm. I don't use the brown word. Brown storm for the summer. But everything out here looks to me like I couldn't I couldn't even think about going long right now. And not so much that stocks couldn't go up just a little bit, or even a little more than a little bit, maybe modestly. But for me, it's what we had on Wednesday. My guess is that's just the start of many more days, as long as we have everybody again on one side of the boat today, which is long. And it's even worse than Tuesday in the fact that the people that were short covered, and now we have almost no shorts at all. Only a handful of people. I think I'm one of the handful that doesn't like this action whatsoever. Anyway, you can always give me a call at 877-927-6648. We're going to go to Mike in Ormond Beach.
Hey,
give me
Dave.
a full report, Mike.
Dave, years ago I used to have the old Timing the Trade toolkit.
Uh-huh.
And on that you used to have the DiNapoli 3x3.
Mm-hmm.
And I've heard you talking today a little bit about also using the 9-day moving average. What, in your opinion, is the closest thing you could use if you can't get the DiNapoli 3x3? What do you think would be the next best thing, like a 9-period exponential moving average? Or?
Yeah, it's not that different.
Okay.
The real difference, and I can show everybody on the screen, is the 9-day is smooth. This is a little bit more jumpy.
Yeah.
So if you go into it, do you get the pretty much the same signals that you would get in this? Now, when he developed the 3x3, he was trading most likely commodities, and that one gave you the 3x3 gives you a signal or a heads up a little faster than the 9-day.
Mm-hmm.
But for equities, there's not a whole lot of difference.
Well, I'll tell you what, I listen to as many of the TFNN technicians as I can archive because I work a lot. And anyway, I've been pretty successful with using the 9-period exponential moving average for support levels and resistance levels, and it's amazing.
I'm not a big fan of moving averages.
Yeah.
And there's a lot of reasons why, but most of the time, especially if you get past anything, there's no real difference between using a 6-day moving average and a 9-day moving average. They're virtually the same. There's a ballistic nature to the market. Everybody gets going one way, and they're going to go that way for a few days, and then they're going to go the other way for a few days. So, if you just want to talk about a ballistic curve out there, 9 days, fine. 6 days, there's virtually no difference.
Okay.
If you go back into it. So the biggest problem I have is people start wanting to use moving averages of 50 days or 200 days or something. And every moving average is off to the underlying signal by 90 degrees. So if you have a 200-day moving average, the first 50 days are going to be wrong. The next 100 days are going to be right. And the last 50 days are going to be wrong again. It's going to give you, if you put a sine wave in, it is 100%, 50% going to be right and wrong all the time. If you just put in a perfect signal that you could sit there and go, I don't even need this moving average. I can see it, right? It's a perfect sine wave. So, that is, especially in markets like that, it keeps you out on the way down and it keeps you out in the way in. And yeah, can you trade the middle? But normally that's where you get the retracement and then you get a big sucker punch or something. Mm-hmm. So, I have to trade at the extremes of the market. I spent a lot of time trading with one of the other guys that was on the radio early on, Tim Ord. I've been talking about him a lot this week. But the whole idea that he kind of pushed was trading at the extremes of the energy in the market. And I really liked it because it's not questionable when a stock tests a previous high on lighter volume. You want to hang on?
Yeah, please.
Okay. We'll be back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we're back with Mike. Did that answer it? More questions? Anything else?
Yeah, well, like I said, I work a lot, and, I get like an hour or so each night to go over my charts and everything. And like I said, I have been using the 9 period, and, like you said, it's close to the DiNapoli 3x3.
It's a bit smoother, so I wouldn't be using it in commodities.
Right.
But for equities, I think that there's not a whole lot of difference. I kind of always find it kind of interesting that people give me say, well, yeah, but you got to be using the EMA. And I said, have you ever sat down and seen if there's pennies worth of difference in a 9-day EMA compared to anything else? And it's like 1-2 pennies or something for most things. Mm-hmm. And it's just like, to me, it just doesn't matter. This is a 9-day simple moving average that I'm using, but it just, if we went back and actually changed it to an exponential moving average, you'd find out I did it, where's the difference? It don't matter.
Okay.
So, you can get a spreadsheet out and just look at the pennies difference. But literally, it's like a penny or two for a lot of stocks like this. And it seems like to me, if you were doing a spreadsheet or something, it seems like awful lot of effort to not do much. I understand the idea that you want to force newer stuff and weight it more. But in the reality, a moving average has zero memory. One of my favorite cartoons is one from the guys that at the website called the Flaw of Averages, FLAW, the Flaw of Averages, and it's a statistician walking across a creek that's average 3 feet deep, but of course, right in the middle of it, there's a 15-footer, and he drowns, and that's the problem. They really don't. Once you get moving a little longer than 6 days or something, man, they can get very dangerous. I've known some people that made computer simulations, and they pretty much blow up right away. So again, a warning about using them. I do like them like this one. I especially like the 3x3, which you can, by the way, do on a spreadsheet too. So if you don't have anything, but I like the 3-day because it actually does give you the number. So like on Salesforce tomorrow, that number, or actually Monday, is 89.13. If we go to the next day, it's 88.45. And if you go to Wednesday, that number is 87.57. So if you just sit down and take an average of 3 days and put it 3 days in the future, you already know what that trend line looks like as you go into the week. You don't have to sit there and think about it a great deal. I just know right now, Salesforce, if it closes over that kind of trend line and then back under that trend line, I've got my signal.
Okay.
So that's what you want to be looking for next week. And again, for this pattern, it's not one that you want to anticipate. So it's not really good for trading options because you really need to have kind of be shooting way ahead of it like ski on options. But that's it. Anyway.
All right.
Well, we're out of time. Thanks for the call, Mike.
Great.
Call me. Don't be a stranger. Call more when you get a chance.
I'd love to.
Not working.
All right. Thanks for everything.
What else do we have? Oh, we got a question. We'll try to get it, answer that in the den. In the meantime, sell when you can, not when you have to. See you Monday. Same bat channel, same bat time.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.